All right, joining us now to talk technicals ahead of a shortened trading week, Chris Verrone, partner and chief market strategist at Strategas Research Partners. How's Trenner?
He's doing much better.
He is?
Yeah, really so.
Give him our best.
I certainly will.
For Christmas. Interesting stuff.
Yeah.
That you're talking about here. You say that the rotational tape has been persisting, which makes you think 2026, this could be a sign of it continuing, which would be really a fundamental shift, I think, from the more speculative, I guess, parts of the market to the more economically sensitive parts of the market. You think the economy's strong?
Yeah, I think so. I certainly think that the market is saying that the soft patch of 3Q and 4Q is probably over here, and it's looking through it. We've been on this idea that the real economy is inflecting up, and I think you see it in the market's message with transports and regional banks and discretionary, all starting to inflect at a time where I think the backdrop of lower inflation, modest bond yields are all supportive into 26.
I also foreshadowed what you were going to say about the 10-year, which is not. Yields are not below 4%. They tried to, but they didn't get there. They're back up. People have noted, and people that are sympathetic to bond vigilante thinking and worried about, I don't know what, cutting rates, inflation coming back, whatever it is. You're not really seeing that much angst, but it's not below 4%. You say don't worry till 4.5%.
Yeah, and I think you got to be a little careful what you wish for. I'm not sure we want bond yields a lot below 4%. What would that say about the economy into 26 if you had yields at 3.75 or some number like that? If you're going to get alarmed about bonds, look more globally. I mean, German 30s are breaking out, Aussie 10s have broken out, CAD 10s are higher. So it's not really U.S. where I think the angst on yields should be. It's more global here.
All right. So then that's not something you're concerned about at this point. The rotation that you're seeing into the real economy stocks is not just in the United States?
It's basically everywhere we look. I mean, look at the commodity-sensitive corners of the world, whether it's Australia or Canada. I mean, you've seen copper inflect. You've seen aluminum turn up.
What is that saying? So you just said that you worry about bonds and other rates going lower in other countries because they're not as strong, I guess, relative to the U.S. But there's a global upswing going on in economies around the world?
I think, Joe, it's important to remember that most central banks have been easing for the past 15 months. So the lagged benefits of that are now starting to show up in the industrial economy. The commodity market, I think, is a very appropriate reflection of that here. I mean, look at the long-term charts on copper, major breakout, aluminum, major breakout. All the related issues, the Freeports and the Rios and the Valets and the BHP have turned up everywhere. So I think there's industrial momentum into 26 that is finally starting to migrate over to the U.S., where you've seen, again, stuff like transports waking up for the first time in 3 years. They've been off the playing field. The fact that we have regional banks getting involved here, I think, is a reflection of a steeper curve. That's good, not bad. The discretionary stocks are also still playing nicely in this environment. So when you look at kind of the real economy signals into 26, I do think it suggests there's this handoff away from just the speculative corners of the tape to something more real.
And you don't try to figure out why it's happening. You just see that it is happening. Is there anything to the notion that their reshoring that we're trying to do is starting to happen? That companies are coming back here because it's easier to make things here?
So I've thought about this a lot with respect to the commodity call in particular. And you could have 3 or 4 reasons why commodities are up right now. You could say, listen, in fact, the cyclical momentum is improving. That's certainly reasonable. You could say it's resource hoarding. That's certainly a reasonable view here as well. You could also say this is the raw material necessary for the next leg of the AI story. So I'm not sure which of those 3 reasons is correct, but I think if you're the stocks, it doesn't matter. The stocks are blunt instruments, and the stocks are responding to it irrespectively. So again, whether it's Freeport finally starting to work, Southern Copper just breaking out, I mean, these are very powerful price signals that I think the economy is on pretty decent footing into 26.
Were the Mag 7 or the stocks benefiting from the AI boom? Do those represent speculative parts of the market or real economy parts of the market, or a little bit of both? And
I think a little bit.
What do they do next? What do they do next year?
I think when you look at the hood ornaments of what the real speculative trade have been, whether it's Bitcoin or kind of the real speculative issues like the OCLOs and the nuclear stuff, I think the market's moving on from that. And Bitcoin's probably been telling us that for 4 or 5 months now. There's this view this whole time that, Bitcoin weaker, the NASDAQ would have to follow. I don't really buy that. I think what Bitcoin has simply told us is the market is ready to move on.
So what's NVIDIA, speculative or real economy?
NVIDIA's still in an uptrend is what that is. And I think we got to be careful that we don't get too kind of wrapped around the axle of, oh my God, Mag 7's underperforming. I mean, listen, Apple's at a new high, Google's at a new high, NVIDIA's fine. If you're looking for weak stuff in Mag 7, it's basically Microsoft and Meta.
Elon Musk is at a new high.
Tesla trades great. So this is, I think at worst rotational right here. And, as they've sold some of the Mag 7 or some of the techs, what has emerged in its wake is, frankly, healthcare. I mean, healthcare looks as good as it has in 3 or 4 years here. So I'm not convinced that this rotational move is the end of the market here.